Hello traders and welcome to this market analysis video. It's Tunapan here, founder of Master the Markets Illiterates Conference and the Traders Open Day. So here we are in this video. I'm just going to analyze the S&P, the Dow Jones and the FTSE because we're just getting a lot of questions on the market levels at the moment, on how it's crashing. And mainly the question I'm going to address is how, if you want to buy into a particular situation at the moment when the market is crashing, what are the levels you should be looking at and how should you be scaling into a position to buy them, right? I won't be addressing shorting in this particular video because we've talked about it in our last week's video on the market update. For those of you who are not on it, you can always call our team and they will put you into our subscription list as well, which you get weekly updates. In terms of on our website, you can go onto our website as well. We do blog updates there too, masterthemarkets.net, where you can see all the video updates that we do every week. So that's our website there, masterthemarkets.net. And if you go on the menu, if you go under the blog section, and that will give you all the weekly market updates that we do and the topics that we cover, so you can learn from there too. So back to this video on talking about the levels, what we're looking at. Firstly, let me just draw this out for you. Before you can start to scale into a falling market to buy, first of all, you need your lows and your highs quantified, or else you don't know where to scale in. And that's what we have done over here at Master the Markets, which most traders would not have. Now, the other thing that you need to do is understand how to scale into the position as it's falling. So the formula that we usually give, which is used by institutional traders too, is basically the 20, 30, 50 mark. Okay, so let me explain what we mean by that. Now, you see, for example, as the market is falling, just like this, right? As the market is falling, now once it falls to a certain level, which is what you need to know, then you put in 20% of your account capital into your first buying position. Your first buying position. So, for example, imagine that you want to invest £100,000 into your total buying capacity, right? Your starting capital is 100,000 that you want to invest in. So 20% of that, which is 20k, you will invest, you will put into the market when it breaks that 20% level, okay? And that's when you put 20,000 in. Now, if the market goes further down, then you would then put in another 30% of your account, which is 30,000. And then finally, then if it breaks into the 50% level, then you put in the remaining part of your capital, which is 50,000. At that point, you would have invested your total capital into the full market position as it's falling through. Now, some of you may say, oh, okay, hang on a minute, Thiru, but what happens if it never gets to my 50 level? It just turns around at the 20 level. Then that is it. You only invested 20% of that expected capital that you wanted to invest in. Okay, and that's pretty much that. Right, now the next question that may be popping in your head is, okay, that's all good to know about a 20, 30, 50. Now, where do I put those levels and how do I analyze that? And that's why, as I mentioned in the beginning part of the video, you need your swing low and swing high levels, the point where it's going to start breaking its support levels. So for example, you see on the level where it goes up, right, it starts to create turning points. And the turning points is what we call the swing low or the swing high levels, right? Now, on its way down, because it's changing its trend, it will start to break those price structural levels. So the first level, when it breaks that, which is the swing low, we call that a price structural failure, and that's when officially then it starts to change its trend to the downtrend, and that's on the technical level. Okay, there are different ways to define trend, but in the technical level, yeah, that's the first time when we start to see weakness in that whole structural ground of an uptrend. And another interesting thing that you can see, which I covered in the previous video, is that usually it takes a very long time for it to go up, but it will start to lose all its gains really pretty fast. So for example, on this FTSE over here, you can start to see that, okay, from 2008 onwards, it took all this while to get all these gains, right? But you can start to see from 2018 to 2020, just in 2 years, it loses back all those gains. Okay, it takes just about like 2 years compared to 2008 all the way up to 2018, 10 years to go up, 2 years to lose all those gains. It happens in every financial market crash, and the reason for that is panic selling. Okay, so you can analyze that too. I'll analyze that again in terms of the Dow Jones and the S&P soon. So once we have those levels pinpointed, which is the most critical thing, the quantification of those levels, which our smart money indicator does, and which is available to all to our members as well. If you want to get to know about it, you can always contact us as well, and we talk about this more in our live trading session. So once we got that, then we mark out all these levels. So the ones in red are from my daily time frame, the ones in yellow are from the weekly time frame, and the last one, the blue one, is on from the monthly time frame. So the first thing I want to see is the first cluster of all those levels, which is what I've got over here, the monthly, weekly, and daily. And that's the first level which I would put in my 20% of my capital in, which is at 6424. Then you see the next level down is my monthly level, which is at 5438, which is when I'll put my 30% of my capital in. And finally, the last 50% over here is I'm looking at least a 50% drop from 7880, and that's roughly at this mark at 3947, where I will go in all the way at 50% in terms of the FTSE chart. Okay, if I were to repeat this, if I were to repeat this on the Dow Jones, don't worry if you do not understand all of this yet. We can go through again in our one-to-one session. You can just click on the link below this video, okay? And that's completely free of charge. Now the next thing what you are looking at is the Dow Jones over here. The Dow Jones went to a maximum of 29,000, just a little bit short of 30,000 over there is what it just did. Let me just get the exact number over here. Yeah, 29,542, just a little bit short of 30,000. And at that point, it started its descent down. The first structural failure, this is a monthly time frame. The first structural failure that it did was the weekly level at 24,610. Now, in terms of it monthly and weekly level where it's coinciding over here, the first level what we are seeing over here, where I would say the 20 level, 20% of your account that you invest in at 21,545. Now the next 30 percent of your account, which is a 50% drop, 30,000 basically. Let's imagine 30,000 divided by 2 is about 15,000. When it drops to there, it's a 50% drop. That's where we invest 30% of my account capital. And finally, the last one, the 50% is where the next monthly level is of the support level. Where if I shrink this, you will start to see that. You see this arrow over here, and that's where I'll put all my 50% in. Remember that the last 2008 monthly low is at 6,440. That's where it crashed to. Over here, 14,000. It did about 50% drop as well over there from the last crash. So study through history as well what the market has done. That will also give you a better understanding. Of course, sometimes you will get outlier years. This year might be one, you don't know. Whatever it is, we can only do according to probabilities and according to risk management as well. The last thing then, I'm looking at the S&P, and again I've marked those levels once again. My 20% level is at 2843, the daily and the weekly coinciding over here. My next level is where the weekly and the monthly are coinciding according to the swing lows at 2306. And then finally we get the 50% level at 1799. Okay, that's where I will put in all my last part of my account. This is also a 50% drop at that point at 3440 divided by 2, that will give you about 1799. Okay, so these are the things that I'll be looking at as I'm looking to buy and to scale in the position. Now, for some of you who may be having the question that, oh, Tiru, but I've missed this moves, what can I do? Can I not put in this 20 and 30 anymore? Of course, you can in one other sense. I mean, what I would do if I miss those moves, when it starts going up, then I can get back in again, right? At 30 and 20. So I can scale it up in that way too. All right. So for now, if it drops further, then if once it drops to this level, I can put 50. And then once it goes up, then I can put 30. And then once it goes up, I can put 20 on the way up. I can do that too. All right. Okay, I guess that's pretty much that. Of course, if you have any other further questions, always feel free to book in a 1 hour session with us on the live trading. We'll look at the markets live with an XTB account as well. XTB is sponsoring that session, so it'd be good. There's no charge to you guys as per se, and you can learn that and together with us as well. Okay. I guess that's pretty much that from me on this video. And as we always say, till next time, stay disciplined, follow your trading plan, and keep trading like a master.